You just stick your head out the window.
Perfect.
Maybe give your hair a little bit of a something.
I need more hair to do that.
Oh, there we go. There we go. It just looked like there was two bits that were like.
Okay. A little bit of personal grooming.
Welcome everyone. We're back. Tuesday night training. We're here. So cool to see so many of your names and faces on here with us. All of our new students that joined us yesterday as well, tuning in. Guys, I'm just buzzing from having an extra 20 something of you amazing people start your trading journey as of yesterday. I hope you wrote the date down. Pretty easy to remember. I think it was the last day of the tax year, 31st of March. That had been the 1st of April. So no April Fools happening around here. We're live and we are recording. I don't know why, but whenever I think about that, I've always got to go and double check and see that it is recording. We're good, Mark. You'll be able to watch this recording later. I know you're at work right now on the other side of the world, but we are doing a repeat tonight. So about a month and a bit back, we did a session on key levels and on also how dad positions stop losses and trails, stops and things like that. And it didn't record. So second time in the 4 years that I have missed recording something. So we're redoing that tonight with a few extras as well. Dad's got a couple cool announcements to show us with some updates on the indicator. And so I actually wanted to open tonight by answering probably a question that I know a lot of you, especially if you're new, are wondering. And if you've even been trading for a long time, you might actually not have a very clear answer either. Someone shot me a text message asking me about this and I thought it'd be a perfect thing to answer for everyone. So I'm going to share my screen quick so you can see it. This is the question right here, essentially around how do we sell something we don't own? Like we understand buying low and getting out high, but in essence with trading, we actually do it very differently. So it's completely different to traditional investing. So here is a slide I've got answering. So how can day traders push sell and short the market down? So, and I asked ChatGPT to give me a good answer here. So if someone is struggling to understand short selling, I'd explain it in simple real word terms first, then connect it to the market. So number one there, the simple example being borrowing and selling. And so imagine you borrow a PlayStation 5 from a friend and it costs $500. You immediately sell it to someone else for $500. Now, I don't recommend going and borrowing and selling things in real world, but anyway, this will help. The analogy will help. So you immediately go and sell it to someone else for $500. A week later, the price drops to $400. You buy a PlayStation 5 again for $400, return it to your friend, and you keep the $100 difference. So hopefully you caught that. You borrowed a PlayStation 5 from someone that's worth $500. You instantly sold it to someone else for $500, and then they went on sale a week later. You purchased it for $400, gave it back to your friend, so you owe your friend nothing, and you kept the $100 difference. So here, number two is how it works in the market. So when traders short sell or press sell, shorting and selling are interchangeable words for trading. So when you press sell, you're borrowing shares or contracts from the broker. So like borrowing that PlayStation 5 from your friend. In this example, you're borrowing some shares from the broker. Number two, you're selling them at the current market price to someone else. Number three, buying them back later, hopefully at a lower price. Number four, returning them to the broker and keeping the difference. Now you can see there, if the price falls, that will equal a profit for you. But if the price rises, that would be a loss because you must buy it back at a higher price. So, and one more example down here, you can see number three, why the market moves down. When a large number of traders sell or short at the same time, more selling pressure pushes the price lower. This can trigger stop losses from buyers, forcing more selling. If big players, institutions, and hedge funds short aggressively, it accelerates the drop. So that's what's happening in the big scale on the markets on the charts. We'll look at some candles tonight that are big red candles, the market moving down. And essentially that is not you and I pushing sell. That is big players unloading large short positions or unloading lots of shares potentially as well. Number four, what about Forex and futures? So that's a little bit more what we're doing. Unlike stocks, Forex and futures markets don't require borrowing to short. In Forex, selling or shorting simply means you are betting on one currency falling relative to another. And in futures, you can sell first without owning anything. You're just agreeing to buy later at a lower price. So hopefully that gave you guys a little bit of clarity. I know in the beginning, it takes a lot for some people to get their head around the fact of how do I sell something that I haven't bought? How do I sell something I don't own? But that's essentially it. The way that we are set up in terms of contract for difference trading, CFD trading, which is what most of us do. I know in America, a lot of Americans might do futures trading because CFDs are not legal in all the different states. So CFD trading or futures, pushing sell, we are able to basically execute a heavily educated bet that we believe price is going to drop. And if we're right, we get paid. And if we're wrong, we hit a stop loss and we take a calculated loss because we always know what we stand to lose when we place a trade because we're risking an amount that we've already predetermined. So drop number 1 in the chat if you've already watched the first video from the 4-part series I dropped yesterday. I know some of you may, look, I saw the views go up on it, so someone's watching it, but there's 4 videos that I dropped yesterday for all of our brand new students and anyone who wants to refresh. And the PDF, Zeph, I can see you into it. Love it, bro. You're a veteran. I love that because you've been around for ages, but still value going back and re-clarifying those foundations. Cool, I can see the ones. Not yet, we'll probably do it after this. Cool stuff, Elise. Well, really cool to see you guys diving into it. Kat, Lise, Karen, Barton, Kim. Cool. Oh, guys, loving it. Very, very cool. Well, tonight, our usual Team Tuesday, we take all the concepts of trading, whether that be TRENDFORCE specific, and then also layer on some other things. So tonight, I've got some cool things that I believe everyone will be able to adopt. It's not going to be very advanced at all and give you some cool clarity for what's going on the charts and the different sessions, a little bit that I touched on last night, and show how some certain key levels are very important to mark up on your charts as points of interest where price might return to in the future. So let me just check. Yep, that's me as usual, being a little bit too loud and getting told about it. So hopefully I'm not waking up any kids. But anyway, I get a little bit excited. I'm sorry, I'm passionate, people. Anyway, okay, let's dive into it. I'm going to share my screen and get onto TradingView. So let's click on here. Bam, there we go. So TradingView right here inside the app. I'm just going to check my screen's not too wide. I'm going to get rid of this. So watch list again, top right corner. I've got here just this is my usual NAS 100 chart on a let's zoom out to 1 hour. You'll see I've got loads of drawings on here, so that's not going to help us much. But I'm going to recreate some of these drawings for us. And so isn't it interesting? Like, look at this, guys. I can't help it. Like, as soon as I look at it, you know, this is the highs back here on the NASDAQ, all-time highs at around 22,000 back in February, last month-ish. And look how price started to drop aggressively and then just pinballed inside this zone. So you got these equal highs under this trend line and these equal lows forming this channel. And then obviously once you broke out of that, started to bounce and obviously came back lower. But when you start marking up these things, you start to see price return to certain levels. We had a gap up here. Price came up, filled that gap. There was a gap there. Price came down, filled that gap. Anyway, I've got a brand new clean one here for us. So on this chart, let's just roll out a little bit. So I'm going to start on the daily just to give context so we can see what's going on here. What have I got? Apparently I did use this chart once upon a time. We'll get rid of that. And some notification. There we go. I don't need that one. So this being the NASDAQ, looking at it on a daily chart, zooming all the way back, you'll recognize this pattern we talked about last night. There's COVID. There we go. 20th that week in mid-March where price just aggressively dipped and then exploded after that. And so the NAS has just been pumping up ever since these lows in December 22, and all the way up we go, and now obviously correcting. And so in the midst of this, you're going to see on the way when price went up. Let me see. There's a tool in here I want to use that I don't use very often. It's a drawing tool. I want to connect a bunch of dots. It's going to be not Elliott wave, or kind of is Elliott wave. Yeah, we'll just do that. It's probably not, but anyway. So going from low points to high points to low points to high points to low points and up we go. Anyway, that's, you can see these highs and these lows. And so when you're talking about market structure, I mean, really that's the ultimate high. And, that's our next wave over there. And we'll just do it like that. Now look, I'm not saying that that's the perfect way to draw Elliott wave by any means, but just to show you the waves and the structure. So we've got one big push up and then a pullback. And then one big push up and a pullback and another big push up. And if you've watched into, I think it's video 2, getting into price action in the course, you're going to see the primary trend phase. So the primary phase here being up and these pullbacks being the secondary phase. And so we want to stay on trend. But you've got these, where a trend is defined by higher highs. So as soon as this high was broken over here, we've got a higher high, so this is trending up, and then we get a low and we get a higher low. This low is higher than that low, so we've got higher highs being formed, lower lows being formed, and again another higher high. So price is trending. Our primary phrase is up. And so I'm going to delete that and zoom in a little bit more, because what happens is on the way, let me actually bring it back. So what I wanted to highlight in this is that there's these low points back here. And often price, once it explodes away from them, like it did here, price rocketed up, but it came right back down to those key levels before it went up again. And I'm going to show you how that happens over and over and over again. So I'm going to zoom in, 4-hour chart. Now we're looking at the exact same instrument. We're still looking at the NASDAQ, but now every single candle is worth 4 hours. And I'm just going to pull the chat up so I can actually see it because it's disappeared on me and I can't see it anywhere. There we go. I can see there's some messages. Sheesh, the NAS. Okay, there we go. Someone's, Zeph's doing something. So this is the 4 hour chart. So now we start to see, okay, same structure. There's those two big tops that we talked about. And there's those low points that we talked about, and prices come down and bounced up and come down again lower. And we want to try and figure out what is causing this to happen, aside from, look, there's a lot of reasons, but big institutions move money around and the different sessions are doing that. So if I click the sessions indicator that I spoke about last night, and if you want to find it, I'll show you again. Just type sessions in here by Lux Algo, put a little star on it, and then add it to your chart. I've already got it over here. So just push a little eyeball to show it. Now that's a little insane to look at, so I'm going to undo that because I'm zoomed out too much. I'm on the 4 hour. I'm going to zoom into the 1 hour, and we're just going to look at this area right here. So where are we? There's that big high. Here's our low, and I want to put it on now and start going, okay, so now we can see all the different sessions week to week. So we're on Tuesday right now. Monday was the beginning of our week here. So our week started in this area. And before that, Sunday, sorry, well, it says Sunday, but for us, really, it closes on Saturday morning. You can see from week to week, let me just get a little box to highlight this. Where's my tools? There we go. That one. So from Monday, for instance, last week, these dates are off. It's saying it shouldn't have Sunday on. I don't usually use this chart. So anyway, there's a gap. So usually when price gaps, sometimes at the end of a week or beginning of a week when it starts. So from Sunday/Monday, the beginning of this week, from there, we have all of this price action up until there, where this week closed. So inside of the week, this is what price did last week. So you can see inside of these sessions what was happening in the midst of last week. So we've got Sydney starts us off in that yellow box, then Tokyo fires up in the afternoon, and then London starts, which is pretty much now. So you can see we've got a little blue line there. So London has just started 18 minutes ago, whatever. And then we get the New York session, which pushed us up higher. Then we get, a little bit of a slower range day with Sydney and Tokyo. So we're looking at the NASDAQ, remember the US 100 or the NAS 100, and it likes to move a lot with London and New York volume more so than Asia and Sydney. So you'll see the Sydney and Tokyo boxes are a little bit more squashed. There's not as much movement. And then London kicks off. New York, again, pushes us higher to the tops of our week up here where, Sydney and Tokyo gave us our highs. And then again, big drops with London, even bigger in terms of New York being present. And again, so we're seeing the entire week worth of price action right here. And if I was to zoom out even more to a weekly, this might give you some more context. I'll turn that off. But really, on a weekly chart, we're just looking at that one red candle right now. That represents all of the price action in that 1 week. And so we've started a new week, but you can see price started high, pushed up a little bit in that wick and closed low. So let's go right back down to that 1 hour again. And so there is our whole week in one candle before, but this is our week here. So you can see the candle opened here for the beginning of the week and the price went as high as that. So that's the high of our wick. And then price came as low as this and closed down here. And so the body of our candle starts at the open and it finishes where it closes, and it closed at the lowest possible point. So if price had gone that low down there and it closed there, we would have a body that looks like this and a wick that goes up this high and a wick that comes down that low. But that's, so just understanding again, it's all in the course, but the wicks and the bodies of candles. But there was our week. And so in the midst of that trading week, we started up here at high, we pushed higher, but we closed a whole lot lower. And so, we can turn on that session indicator again and see this. So when I'm starting my week, I'll keep that box in there for now, just so we can have context of what a full week of trading might look like, looking at one instrument. But what I like to do is I like to zoom out and think, okay, well, what's going on here? We've got, and this is how I approach the charts when I'm starting. I will use a tool up here called a horizontal ray, and I've got a star on that. And what that does, I like to click this magnet on as well. You can adjust the strength on it. I like it pretty strong and snappy. Just means that it's going to automatically snap to the closest wick. So you can see my cursor is it's just automatically going snap to the top of a wick. So it's bang on exactly where I want it to be. So our all-time high over here, well, in this particular area that we're looking at, is up there. So there is the high of the NASDAQ. And anyway, that is snapped on there. So I'm going to look at that. Okay, that's our high. So that's, that's where we got, that's a point of interest. And then I'm going to look at these other levels. And what I'll often do is I'll go, okay, London, opened up here, and I'm a little bit extra. I'm not as OCD as Dad, or CDO, because that's alphabetically how Joe puts it, and Dad adopted it. But London's in blue, so I've got this blue color here, so I know that every time I see that line, I know that that's a line for London. And then if I want to, I can click clone, and I'll just take that, and I've got another one, and I'm like, okay, there's a high of London over there, and where is another interest level? So there, not interest level, level of interest to look at. Another one, and I'll be like, okay, well, there's a low down there that London was involved with, and then I'm gonna go, okay, what do we got next? Then we've got New York, and I'm gonna look for other sessions of, okay, well, there's an interesting high over here, and I'm just gonna mark some levels that I believe that's probably more like London. It's an overlap too. But look here, this is what I like to see. So this will be interesting to see in the next day or so. So we've got one here, and I'll color that one according to New York, like this. And you can see that there is where, as high as New York got to yesterday, and then the day closed, and then price came down, and it's opened, and it's come really close to that level. Now, why is that a big deal? Well, when anyone is shorting the market, like we just talked about, that's draw a short position for you. So if someone this tool right here just shows what we might have to visualize a trade. So say you got into the trade up here, and this box just represents our risk. This red box up here represents our risk. So if we were taking a massive swing trade on the NAS, and we got into this trade, and we had look, this is ridiculous, but 100 pip stop loss, just to visually make it look relevant, and we were going to go for a big swing trade down, say 1,000 pips, which it did right there. That's 10 to 1. So drawing this out, this drawing tool, this right here, if people push sell over here, they believe that the NAS was going to go down, and there's reasons. You might have had a trend line like that, and price broke that trend line and started to go, and then it already went. So what if you got into a sell there? Well, you need to put your stop loss somewhere. So if you push sell, you need to say, right, I am risking 1% of my account, or whatever it is, and that means I've got to put my stop loss somewhere. So up here would be your stop loss. So if price came up, you would be stopped out. But if price ran down in your favor, you're making 10 to 1 on a massive swing trade like this. But up there above those key levels is where the stops are. So the money always gravitates towards the money. So you'll see, like, a price will often return to these levels because that's where the money is. So I like to do the same thing. So that's just an example of what a swing trade might have looked like if you were shorting the top of the NAS and doing something like that. But what if you were shorting it from just, yesterday, and you took a short there thinking, man, I think we're in a downtrend. I think we're going to head down. I'm going to have a real tight stop, maybe just like 20 pips. And I'm going to target, these lows. We're going to come down and break these lows. And then what happens? So right now, I mean, firstly, there's nothing fancy about that being a trade, but there's a lot of stop losses sitting above the highs of New York. I can guarantee it. There's a lot of money sitting there. What do I mean by money? Is if people that are selling, your 1%, whatever that is for your account, it might be a whole lot more for big players. What if their risk is there, and the big markets know this, so they'll often return to those levels, to what we call a stop hunt, and hunt those stops out before moving the market again. They'll grab that money, that liquidity that is someone else's risk, before taking it away. So that's why I like to mark up these key levels, because that's that key level for that New York volume, and I guarantee there's money sitting above there. And you can see price got real close to it. It doesn't always get bang on, but it got close, and it might continue to actually come up higher. I mean, this is our MACD, and it's blue and it's wide, and on a 1 hour chart, this thing is still looking like it wants to go higher. So I wouldn't be surprised if we still do actually come up and break this level. But that is why we're actually talking about these key levels, is that there are often players that are having their stop losses on the other side of these key levels. So I'm going to get rid of that, and I'm going to go back in time to find a few more that are going to be a little bit easier to spot. So it's a little hard when we haven't got too much price action behind us. But let's zoom out a little bit. Let's go to the left. Let's look at another week. I'm going to keep that over there for now. And I'm going to show you how this happens over and over and over again. So let's just find, I mean, wherever you got these overlapping levels like this, you can see how close these were. I mean, here's a really good example, even right here. So there is what would have been the highs of Asia right there. We had the high of New York, so we know that this level was here, but at least starting the day, price came up that high. And then London started in the evening and pushed it down. And then once New York kicked in around this candle here, they pushed it all the way up with that wick, took out all the stops. Like if people were shorting this market and they had their stops sitting just above that, well, depending on when they got into the trade, right? If they got into the trade in that big red candle, their stop loss is somewhere, and their stops usually go above the highs. And so anywhere around that level there, I mean, there's 40 odd pips above the high, And what happens? New York comes in and thrusts up into that level, hits those stop losses, and then continues the trend down. And so you will see those, what we call stop hunts, over and over and over again. I'm trying to find some better examples right now on the NAS. What was the name of the indicator? There we go. Thanks, Zeph. Yeah, Lux, Algo, or just type in sessions and it'll show up. But you'll see these levels hit over and over and over again. It's never gonna be perfect, but you can see that, you know, there's some. Well, have we hit those levels yet? Let's go across. Ooh, I don't know if we have yet. Let's see. Yep. So last night, when the markets opened on Monday, price was up here. So check this out. Here's our ultimate low more recently, going back to there, where price ran up in the last 2 weeks, and then the week closed over here. And then what happened when the markets opened? There was so much selling pressure, and we have what's called a gap. And I'm explaining a few things to you guys all tonight. But this gap right here between these candles, I'm going to draw another little box like this. So between there and there, that's a gap. So what happened is the week closed, and you'll often have gaps that are formed at the end of a week like this at the beginning. There was so much selling pressure that happened on the last day of the week that over the weekend, when all of the brokers are closed, so Forex and indices are not 24/7. Crypto's 24/7, but these charts usually shut down on the weekend. So from Saturday midday for us here in New Zealand till Monday lunchtime, they are shut. And so what happened was there's so much selling pressure that over the weekend, a whole lot of sell orders got placed. And first thing on Monday morning, they all got executed, and they just continued to push the market down, but it left this gap. And so gaps usually get filled, 40-something% of them get filled on the day, otherwise within a certain amount of time. The statistics, I don't have all of them right in front of me. But what happened? Price gapped down, and within that first candle of that week, we stop hunted all the liquidity that was sitting here. So everyone that had been buying this market up, whether they had, you know, long positions like this, so long position, say they went long from anywhere on here, this point, and their stop losses would have been just under those highs, just under those lows, sorry. And they were in for a big swing trade, trying to go crazy, whatever. Just to give you the visual, you know, they might have hit their target. Maybe they thought they were going to even hit it higher, and they didn't actually. They're still in this trade, so let's draw it higher. If they'd pushed buy over here and they were holding a swing trade, which is not our approach, but this is how a lot of big money will trade, price came all the way back down, hit all the stops that were sitting underneath these levels, went a little bit lower to grab some more, because there's probably more key levels to the left that, you know, I'm not going to get into right now. But hopefully you guys are starting to see visually like how price will often return to these key levels of interest over and over and over again. And so, I mean, here's a really nice example. So you guys will start to see these over and over and over again. So I'll give my magnet tool back on. These highs of London and New York right there. No, sorry, wrong one. This one. There we go. Highs of London and then highs of New York. Price came down. Look at that. We also got this big gap, and then price came up, filled that gap, came right up to that level, and then rejected again quite hard. And then eventually we broke and retested. And look at that. We broke through, and then that red candle came down and tested. Another doji, another little aggressive pushback to gain more liquidity, and then up it went, and then we went up, and etc., etc. So you will see these levels over and over again. I love to mark them out because they're often, price will return over and over. I mean, look, yeah, right there. I mean, you just start seeing them everywhere, guys. So it's something, especially while these markets were coming down, I guarantee I would have had a lot of these levels marked out like this. So there's a key level right there because that was a significant low. I might have another one down here, and we already spoke about that one, I'm pretty sure there. So I would have all of these lows marked up like this, so that when price is coming down, I know it's likely that price might pause there. So look at that, even these wicks on the 1 hour chart, these wicks, these candles, the wicks came lower, but they closed above, pushed up, and that would affect a lot of people, but then it completely just fell off the cliff and continued to drop. And then again, right there, that wick came down, tapped the level up, and you'll see it again. Look at this, price came below and then closed below, rejection. You just start seeing how these key levels become basically what was some measure of support when price was above it, breaks through that floor, and then that floor becomes a ceiling, and now it's resistance, breaks above, closes above, and then we get this one more test where what was a ceiling now becomes a floor, and then price explodes off that. And you'll see that over and over and over again. So let me just check the chat for a second. Be aware of the settings. Yeah, thanks, Marcus, too. And adjust for daylight savings. Yeah, so this app, this indicator is not necessarily updated in terms of all the different times and things. So if you click the settings icon here, you're going to see it says New York and those times, London those times, Tokyo. So it does pay to come in here and manually double check that these are actually the correct times in London and New York to the open. So I remember a lot of you guys will see, let me pull up a website for you guys. I don't have it, the Baby Pips website. So all of you should know that Baby Pips website, but on that site, I'm gonna see if I can find it on my phone, there is a time calendar that shows the trading times and the volume, and I'll overlay it on this recording later so we don't get stuck while I do my Googling. But in that you will see the volume times and all the most ideal times. But that app I just dropped in our group chat too is Savvy Time. I often look at that to check what's the real time in London right now. The time in London is 8:29 in the morning. So, you know, Sydney right now, sorry, not Sydney, New York is 3:29 a.m. So I want to know, like, when are those opens actually happening? Zeph, thank you. There we go. He's clicked it up for me. I'm going to hit that and screen share this so you can see this is a wonderful example. Thanks, bro. I'm gonna share that right now. So this is what it looks like. Baby Pips, where are you? Load for me. There we go, this one and this one, this website here. So Baby Pips, you guys should all be familiar with this because I know I sent a lot of you guys the basics course that they have as well. But inside this tools and Forex market hours, you're going to see here this little handy dandy tool you can drag across and see. But right now, 8:30 p.m. for us here in New Zealand. And you can see the volume this is when it starts to pick up. So there's less volume during the day with Asia and Sydney, but then it starts to pick up with London. And you can see here the blue box, we've got London that has fired up. And then that goes all the way through. And then as New York kicks in, which is our green box here, which is saying 1 in the morning currently, that's when it really starts to ramp up. And then again, like a lot of us start trading around 5 in the morning, somewhere around there. There's still a lot of volume and a lot of trades to be had until it starts to wind down towards the close of the day. So pretty cool app to have. You can have this on your phone just to double check and see things like that. And just because this says there's low volume right here in Sydney and Asia, that does not mean there isn't trades to be had. Gold has been absolutely thumping in the middle of the day right now, creating new all-time highs. And I know there's other things like the JPY, the 225, the Japanese index, the Nikkei, that also moves a lot during the day as well. So let me unshare my screen and get off there. Let me just check out the chat, what's going on. But yeah, thanks for highlighting that, Marcus. That's brilliant. I really appreciate that. And yeah, I think, unless there's any questions, just want to highlight that's a tool I use every day. And especially when you're new, I can't tell you how much I try to manually draw those sessions. I used to draw vertical lines for what I thought was the London Open and the New York Open and this, that, and whatever. And when I found that indicator a while ago, someone shared it with me, I can't remember who right now, but that was a game changer. Being able to just click that button and see all those sessions and start to visually see those different blocks. And then when you start getting familiar with a certain chart over time, like this, if I haven't said it to you yet, if you're brand new, highly recommend focusing on one chart for as long as you can. So the NAS, I spent my whole first year only trading the NAS, my whole second year on the US 30, which is the Dow, and my whole third year on gold. And this being my fourth and a bit year, I look at all of them in the morning and check which one looks the best. But the NASDAQ works really well in the evenings. I think I mentioned that last night. There's good volume because there's good interest in the London markets in the NASDAQ because it's the top 100 tech companies, which are a global issue. Not so much the US 30, which is the top 30 American companies. Not as much interest in London markets in those. You'll have movement in the Dow right now, but not as much I found as the NAS. And then gold, I have found can have movements all throughout the day because everybody loves to trade gold. But gold and the Dow are definitely a little bit more whippy and a little bit more potentially ugly. There's some nicknames for the US 30. Some people dub it the Dirty 30. It moves amazing. Dad loves it, his favorite. And but when you're brand new, I would say the NAS is probably gonna be one of your best bets to focus on. Great volume in the evening on London, great volume in New York in the mornings. Obviously a little bit sluggish during the day if you're trading midday in New Zealand, but I would, if I were me, I would focus on the NAS initially, and then from there potentially start to get familiar with the Dow and maybe gold. But choose one initially, get familiar with it, start learning those levels, see what the all-time highs and lows, and just start to look at price action. And then you'll start to see that, like the New York box and that London box, and you'll start to, okay, wow, so that's how much it usually moves up and down during a London session or a New York session. And so when those sessions start, you'll often see, like, if London starts moving it up, New York will often take it a little bit further. And if they're coming down, you'll see London might move it down. And when New York fires, New York will take it a little bit further. And you'll start to see similar sizes in the amount of pips in the movement within a certain session. So anyway, that's enough from me for that for now. But it is time for Dad. So Dad, if you are there, I know, wow, we got it stacked out. It's so cool having so many of you on here with us. Seriously, tap yourself on the back. Love it having you guys here live. So Dad, I'm going to pin you to the chat because I know you got some great stuff to share about stop losses. And
Yep.
we covered that last time too, and some cool updates. So I'll hand it over to you. Let's go.
Yeah. Well, thanks, Ty. A lot of wisdom there. And again, welcome to the people who just joined us. And really do wish you all the best for your trading journey. It's going to be such fun. I was saying last night, I think how much I've enjoyed this. And thanks, Ty, for your sharing. And once again, if you're new, don't get kind of too overwhelmed because there's a lot of stuff. As I said, I think I said it last night, it's like learning another language. So initially, there can be a whole lot of concepts that may seem completely foreign, but trust me, eventually it will grow on you. So I'm going to talk a little bit about the stop loss strategy. And gee, a moth is just, I was about to ask you guys, can you see the moth on my screen? A moth. A moth just landed on my screen. Anyway, I'll just look at the example with how I did my trade on Saturday. But a key part of trading is learning to manage your stop loss. And so I want to talk about the strategy, what I find helpful, what I use. And we did discuss this about a month back, but also I like what Ty said about, if you're a beginner and you're learning, just stick to one instrument. Like the NASDAQ is definitely the easiest, then maybe the Dow, then gold. And depending on what instrument you're trading can determine, your strategy for your stop loss. The easiest is the NAS that tends to chug away without big pullbacks and big wicks. The worst is gold. So gold tends to have bigger pullbacks and bigger wicks. So it's a bit harder to trade, but still, lots of value in trading it. So depending on what instrument you trade can potentially affect what strategy you use. So basically, there's two stop loss strategies. Either you have a fixed stop loss. And so with a fixed stop loss, I'll show an example in a minute. The indicator, when a signal comes, it tells you where to put your stop loss. A little SL appears with a little red dashed line, tells you to put your stop loss. And so either you can fix it, leave it as it is, and wait for your trade to reach its profit target, or I could probably still say under fixed, you could also just move it slightly into profit once the trade begins to run. Then you just leave it. And sometimes I do that. If I'm confident of the trade, I will set my stop loss and then wait maybe a minute or two, then move it into just about break even. Then maybe I'll go get a cup of coffee, get a drink of water, and then come back. I'm not panicking. I'm trusting my decision and trusting the indicator. So either use fixed or you can use what's called a trailing stop loss. So that is probably what I use most of the time, is what's called a trailing stop loss. So it really is more of an art than a science. I wish I could make one rule for trailing stop loss and say, do this every time. But honestly, every trade is different. That's what I like about trading. It's creative. And you learn to express your creative juices. And you learn to manage each trade. So I love it once the trade runs, especially once you're in a risk-free position, you move your stop loss into profit. And then, you're kind of watching the trade, you're managing it. I just love, I tell you, I've just found that so fulfilling. And so it is a bit of an art. There's not one rule. I can't say do this every single time and you're going to be successful. You've got to read every single trade. I mean, my early mistakes was moving my stop loss too quickly. I just didn't want to lose money. I still hate losses, but I've learned to deal with them. It's one of the fears of trading is losses. But I mean, often I would move my stop loss too early. And what would happen is it would pull back slightly, stop me out for 2 pips. And of course, what would happen? It would go then and reach the target almost every single time. And so what I've learned to trust the indicator, especially, the main trading trend zone that's blue on the way up and that reddish color on the way down. That is powerful for what's called support and resistance. So I've learned to trust the indicator more, trust my judgment more, and not to move it too early. And I'll give you some tips tonight, things that I've learned that will make it much easier. But to mostly get stopped out by pullbacks. And that's just the reality of trading, is that no trade is perfect. I wish that every trade would run smoothly, but it's not the case. There are pullbacks, and then it's the real art of what is the trade looking like? Do I trail my stop loss more? Do I hold it, etc., etc.? And maybe I'll just share my screen. It'll be easier to illustrate it. So I'm just going to click share here, and this should be my. Let me just see. Is that the right screen coming up? There we go. So what I've got here, I'm going to work through my trade on Saturday and just talk about how I manage that trade. But obviously, I say we don't like pullbacks. Those are what end up stopping us out. So there are a few ways to read a trade. Now, generally, I love to trade. What I really like, we mentioned this the other day, is in the left-hand corner. For those of you who get to learn this, we've got something called the TZA, which stands for trend zone alignment. Now, remember, this is looking on Saturday. So on Saturday, this was red. So either that light is green, orange, or red, a bit like a traffic light. In South Africa, we used to call them robots. I'll stop saying that. Sounds so funny. And so basically, when that light is orange, that means you are between the main trading trend zones. So in other words, you're between EMAs. Now, whenever that light is orange, it means when the trade is running, there are likely to be other trend zones, other moving averages in the way that can cause price to pull back. And so that's when you got to be a bit more wary about a trailing stop loss, because if you take a sell or buy, you will still get signals when that light is orange, but it's going to be far more jerky. So, for example, this is a counter trend trade. Let's pretend things were orange and you got a signal down here. You can see with counter trend, it goes up, down, up, down, up, down. And if you move your stop loss too early into profit, then you're going to get stopped out. And so the safest way for a trailing stop loss is when you're trading with trend. That's why we've called this indicator TRENDFORCE. We want to trade with the trend. And so if you're in a sell, like on Saturday, I took the sell. This was at 556. This light was red. Everything was down. And you can see when you trade with trend, look, I use Heikin-Ashi candles. That'll be in the trading for the new people. You can see how smoothly that trade dropped down. And likewise, when that light is green, especially on all the time frames, and you're trading with trend, and so if all the high time frames are with trend, that'll all be blue. And if it's for buy, uptrend, and if it's bearish, moving down, that'll all be the red color. And so that does determine how I move my stop loss. So again, if it's completely with trend, it's far safer to trail it down. But if it's in orange and you're between the trend zones, then you've got to be a little bit more wary. So if we just look at what I did here on Saturday. So on Saturday, I took this trade, and I knew this was going to be a winner. And so, I mean, there are a number of reasons for that. You can see part of the strength of our indicator is this is the 55 EMA, which is the same basically as the 3-minute trend zone. So this is what's happening on the 3-minute at the same time. It's the 55 on the one. When you get a signal, for example, it's a sell, and that is bright red, the higher time frame means the 3-minute is pushing down strongly. So I knew when I took this trade, it was going to move. But so with Heikin-Ashi candles, you can see what's nice about Heikin-Ashi candles. There's only two kinds of candles. If they're bearish, which comes with sell, they've got flat tops and the wicks at the bottom. And if you in a buy and it's bullish, they've got flat bottoms with the wicks at the top. And you also get dojis. You've got wicks on both sides. So you see there are plenty of dojis. They come in slightly different shapes, but they've got the body in the middle, the wicks on both sides. And so what I like about Heikin-Ashi candles is the safest way to do your stop loss is simply to follow the top of each candle as it closes, provided it's got a flat top. And the same for a buy. If you're in a buy, you simply move your stop loss up. You keep it below the flat candle, the flat base of the candle as it moves up. So that is what I do most of the time. In this particular trade, I didn't do that 100% because, as I say, each trade is different. So with this trade, I'm always looking at price action. So here was a big run number. So this, I put white lines on the big run numbers. This was 41,600. Down here's 41,500. And what tends to happen quite often is price often respects these big round numbers. It sometimes tests them, and then there can be a pullback before it moves down again. And so when I started this trade, it would have generated a stop loss signal. Well, let me just say, for those who are new, I'll just go on gold quickly. And I mean, here's an example of a sell. And so some of you wouldn't have even opened the indicator yet, but when you get a signal, the indicator generates a stop loss. So for example, I mean, I'm on demo now, double check, yep. If you click sell, now Ty's going to go over this on the weekend. Your stop loss, you then can simply drag to where it says stop loss, and your TP, you can put down, say you're going for TP3, you drag that down and say, Ty's going to spend more time doing this next week, but you are told where to put your stop loss. Then basically when the trade runs, you've got to work out you know, how far are you going to move it down and how you're going to move it. So when I mean you trail your stop loss, you just simply trail it on the top. You see, I'm putting it on the top of that candle. Then when that closes, you can move it down to the next one and then down to the next one. You simply trail it. So if we entered this trade on the sell signal, we already have been in profit. We would have been in what's called a risk-free trade. So that's a trading stop loss. You're moving it down as the trade is moving down. All right, so if we look, so what I didn't rush because we were completely bearish. This light was red on Saturday, which means we are below all the EMAs. The trend zone table here was completely red. Everything was red. I knew that I didn't have to panic and try get into risk-free position too quickly. So I held on it. I pressed sell, and then I think I moved it slightly just into profit on the second candle. I just left it there for a while because I wanted to see what was going to happen around the big round number. Once it closed below, then I started trailing it down. I just put it on the top of each candle as it closed. When it got down to here, I waited a little bit. My target was the green line. That was the S1 daily. And for those who knew, it's just a pivot line that price respects. You can see how price respected it. That was my target. I waited there because there was a resistance trend line running through that I was worried it may just bounce back. But after their prices whacked through my target, that was 93 pips. So that is how basically a trailing stop works. You just follow the candles down if you're using Heikin-Ashi candles. And again, if you're in a buy, you simply move it up below each candle until it reaches target. So I think my stop loss already was how many pips in profit? So by the time it was there, I was already 60 pips in profit with my last stop losses over there, and then it broke through the target for about 93 pips. All right, the other things also to consider as well is that I often use, just for the students, our people that are more advanced, I also use Fibonacci retracement for my stop losses. So now we haven't done a session on this yet, but you can see if we looked at the beginning of this move down, that was the high. And the way I use Fibonacci retracements, I do it to the first pullback. And then that can be useful for stop losses. So very often I will put a fib on the high, and then you put the 0, that gray line, these are my colors, on the first pullback. And then that also can become effective for a trailing stop loss. So if we applied that to this trade, we were in a sell there, I could have moved my stop loss, and you can see all the numbers there to the 786. Then once it closed below the next fib, which was the -1, would have moved it there. Then when it closed below the -1236, I moved it there, and then I could have moved it there, and then basically after that, it hit the target. So, I mean, that's going through very quickly, but I often use Fibonacci retracements because these are very strong numbers for resistance and support. So let me just delete that quickly, make some space. Okay, let me take that off the screen. So that is another way that I also use a trailing stop loss. What's also good, just by the way, so I haven't ever said this before in training, but it's what I often look at. You will see that for those who are familiar with the strategy, our candles have 3 different colors, bullish and bearish candles. They start off as hollow. You can see there was a seller diamond, a seller momentum there. They start off as hollow. As more sellers join the market, they now become full color candles. Then when even more sellers jump in, they become bright, and often then the trade really runs. And so what made this trade safer is when you get a signal with a full color candle, it means sellers are jumping in very quickly in the trade and it's highly likely to move. And so, I mean, there's not always perfect examples, but when I took this trade, full color candle, that meant that's why I could move my stop loss into break even just after that candle, because I knew that definitely was going to push down a bit because the sell signal came with a full color candle. So generally with full color candles, you will find it's often much safer to move your stop loss into a risk-free position. If I find other examples here, you can see there's a sell signal and we got a hollow candle. So that's unlikely to push down. So if you took that sell, there may be other reasons not to take it. I'm just using this as an example. If you took that sell and you're going to move your stop loss to break even, boom, you would have got stopped out straight away. And if you look at examples, you'll find that where you get sell signals, It's not true every time. There was a sell signal that did push down, but there was a big pullback. But generally, when trades start with the full color candle, it is often quite safe to move your stop loss to break-even position a little bit early. So that's one of the strategies that I use for my trading my stop loss. All right, so obviously, if you're on higher time frames, you do need a bigger stop loss. So for example, on this trade, I think it wasn't a massive stop loss. I needed the stop loss sort of plotted there. Because I know the program. I needed a 30 pip stop loss, and I took 93 pips. I got a nice 3-1 in that trade. But if you were trading on the 3 minutes, sometimes you may need a 40 pip stop loss because the candles are bigger. But then, of course, if you can hold the trade, then your profits are also bigger. And so just also be patient. So again, this is a good tip tonight. Full color candles on signals can mean you can move your stop loss to a break-even position a little bit early. All right, so the hardest thing with trading stop losses is if you're entering an existing trade without a sell or buy signal. So for example, if you missed this entry, if you missed the sell signal, price is moving down, we can see there was a nice pullback, you could have re-entered the trade over here on this diamond. Was that diamond means sellers are trying to push price down again. So we can see price hit this target, rally back, buyers try to push the price up, sellers jumped in, try to push the price down, and we can see that diamond means normally safe to enter. You wouldn't have to have chosen where to put your stop loss, and it's not going to be generated. Then you've got to work out again how you're going to move your stop loss down. So it can be a little bit more tricky if you're not going from the beginning. But there were reasons you can see here. MACD, we're not teaching on it tonight, but that went bright green. So it would have been a great teaching point. This would have been a great place to enter a trade. The MACD wasn't aligned, but you did have a diamond. You had a triangle down and the histogram going bright red. And then you also could have maybe tried a trailing stop loss again. This would have been successful. You would have got stopped out on that candle. So you still would have got maybe even, 25 pips, nice little trade there. All right, so that's basically how I use my trailing stop loss. That's most of the trades I use. Then I also covered, when we talked about the stop loss, I also covered again just the power of the MACD. It can be used for many things. So just so this is recorded for future people. If you haven't set a target, sometimes you want to let the trade run, and you may use a trading stop loss, and you may have held it here to let it run. You can use the MACD in 4 different ways to exit a trade. So the 4 ways is when you get the first triangle up. So if this trade was running down, the first sign this could be reversing is you can see this triangle up. That means reverse re-enter. So you could have taken your pips there. If you took it there, I mean, that trade I know from measuring it on Saturday. So if you exited on that triangle up, which would have been on that candle, you still would have got 76 pips. 77, that would have been a good trade. Then the second place you could have exited could have been, you can see here is the MACD crossover that came on that candle, that red circle. You would have got 80 pips if you'd stayed till then. Then the first time the histogram changes to a dark color, okay, that candle, you would have only got 63 pips. But if you held your nerve, the 4th way to exit a trade is wait for the trade to go bright green. So that went bright green, completely different color. You would have got 86 pips. So you can use this MACD to exit trade. So again, your first exit could have been the triangle up. The second exit could have been at this is a bullish crossover. The red circle means momentum is now reversing. You could have also exited on the first bar of the histogram going dark red. And if you held your nerve, it works better on high time frames like the 3 minute. Once you get a bright green color opposite to what you're trading with, that really in a place to exit. But if you chose any of those 4 ways to exit without setting a target, you sort of had a pretty good trade. All right, so just 2 updates I'm busy working on. So you may have noticed that I was just out walking and thinking, as I do often go out praying, and I just thought I needed to re-look at the SMA 21. So this is a key part of our strategy. This moving average, which is white, is a key part. Now in version 1, we had it in 4 different colors that made too much noise. So for a seller, it was either dark red, if the trend was strong, or light red if the trend weakened. And then if it was bullish, and you were in an uptrend, it was either dark green if the trend was strong or light green. So it's using similar logic to the 55. So we found that was too noisy, but I really felt to revisit it again, and I found it very helpful just to have the MACD, instead of, it's the 21, instead of in 4 colors, to have just 2 colors. So it's bright whites if the trend is strong, and then it goes to a gray color if the trend is a little bit weaker. So for example, on Saturday, when I took that sell signal, you can see the SMA was bright white, meaning very strong downtrend, plus the 55. And you can see that pushed right down, staying bright. Now, it's very easy to change. We're probably going to put this in the next update. If you just go under style, you can see here SMA bright colors, strong trend equals strong trend strength. If you don't like that, you can simply change that back to white, and that'll look exactly like it is at the moment, the white. But I do like knowing just the extra safety of a strong trend. So I've put back that second color in. If you don't like it, when you get the update, you can just change it, but it is helpful. So whenever you see, like here, you can see it was gray there. On that candle, it goes bright white, and you can see, boom, price just fell. So if you go and back test it, whenever that goes bright white, so if you wanted to re-enter a trade, that's almost like a valid entry. Look, there goes bright white, boom, price fell about 40 pips there. So if you go back test it, it's very helpful. So we're going to bring the 2 colors back into the SMA 21, which you'll see it's very helpful. It's the same for buyers. Okay, this was counter trend, but you can see whenever that goes bright white, look, price moved up. So from when it went bright white on that candle, I mean, price wouldn't have taken that trade, would have broken the rules, but there was a 50 pip move there. And so whenever you see there's a counter trend move, SMA's bright white, and boom, that shot up 50 pips. The sell was gray on the sell sign, but as soon as that went bright white, we can see there was a healthy drop. Let me just get my measuring tool. Always gives me problems with tool. That dropped down, 53 pips. So I feel that we will find that very useful. And so we're going to bring it back in and say, if you don't like it, you can just blank it out and have it white. All right, then the other update, some did ask, I've forgotten it was just before we close and hand back to Tara. And I can't remember who it was. I want to honor the person. They said, could we have an alert setting for the MACD when the color changes to either bright green or bright red? Now, I've done that. So there now is an alert, and I tell you what, this is a winner. This alert, I use it all the time now. But I want to say, I just use it on the 3-minute. So all you do is, I know we've got a lesson on, but if you just right-click in the indicator and you click Add Alerts, it pops up. You can see a histogram, bright green start. You can create it there. And if you want the bright red start, boom, you click on that. And that'll then add it to your alerts. So I wouldn't recommend on the 1 minute, because you're going to have a lot of signals going off because it changes color quite a bit. But on the 3-minute, it is very helpful. So this trade I took on Saturday, let's go back. I mean, I haven't got the 3-minute up now, but what happened was, as that sell signal plotted, which was a strong signal, beep, the 3-minute histogram also turned to dark red at the same time. That gave me extra confidence that that's going to move. Remember, on the 3-minute, when this changes color, there's always a good move. And so I use alerts quite a bit, but I've found for me, I mean, we've got alerts for quite a few things. My alerts that I've got set up, I've got the MACD, I just use the 3-minute alerts because they're quite well spaced. So I've got the 3-minute histogram turning strong bearish color, which is bright green, histogram MACD for the NAS. So I've got the 3-minute NAS and Dow turning bright green and bright red. And then for my sell signals, I've got sell and buy signals on the 3 minutes, bright green, when they trigger off. So I've just got those 8 alerts. I found that's just what I need. Otherwise, there's a lot of noise, things going off. But of course, you can also set alerts for rockets. There's quite a few options you can use for the signal. So those are the ones that I use. So I think that's all I wanted to talk about tonight. So I'll hand back to you and you take it from there. Let me click unshare so I can stop share. There we go.
Cool. All right. Thank you, Dad. That was awesome. Let's see. Let me just unpin you for us from here. Zoom settings. There we go. Okay, cool. So There were a couple of questions in there that I didn't get you to answer, but one was just, yeah, is there always a stop loss? So every single time a sell or buy signal fires with TRENDFORCE, it'll always have a stop loss
Yep.
SL level present and TP1, TP2, TP3 for take profit 1, 2, and 3. But every time there's a new signal, those ones delete and the new ones are there, just so that you don't have an extra stack of lines on top of every signal. So looking back in time, you'll still see the buy and the sell signals, but you won't see where the stop loss or the take profits are on all the historic signals. Otherwise, it'll just be a mess. So in real time, whenever you're looking for a signal, like, am I taking this signal right now? I guarantee in that particular moment, you'll always be able to see the stop loss and take profit levels for the most recent signal that has fired off. So
and you can use the playback function. You've got to use
that's true.
normal candles.
Yeah.
So if you want to go test, you can use the playback function. It's on the bottom of your screen. And then with normal candles, it will show you each signal with the stop loss and the 3 take profit targets.
Yeah, and I'll cover that replay test tool in the video we're going to do next for paper trading, demo trading, how to basically practice with a paper trading, demo trading account, which basically means fake money in real-time markets. So I'm going to give a full walkthrough on what that looks like, and we'll include that replay feature in that as well. And we'll also do some teaching very soon, because I know a lot of brand new people don't know what Heikin-Ashi candles are. And I didn't cover the Heikin-Ashi candles in the 4-part series. We'll do a proper session on them. It's just a different style of candle. So the most popular candle is the traditional Japanese candlestick, which has the body and the wick, top and bottom. So that's in the course in a lot of detail. You'll definitely be familiar with that. The body just represents, you know, where price opened and closed, and the wicks represent how high or how low price went during that time period, whether it's a minute you're looking at or a 3-minute chart or whatever. That's how candlesticks work. But Heikin-Ashi, there's a very complex formula how they determine those candles, but they're brilliant. They remove a lot of noise. So when you're new, they actually can be very helpful to use, because while things are trending down, that trade of dads that was solid red the whole way down, I guarantee on normal candles, there may have actually been a couple little green ones in there that would have faked out some people that were thinking, oh, is this reversing? But Heikin-Ashi does remove a lot of the noise. So we'll cover that. They look a little different, but ultimately they're quite amazing. So I use both, but you know, anyway, we'll cover that. And Byron, great question as well, just asked about some of the details of TRENDFORCE. So I lightly mentioned it last night, and so tonight's our usual team training, because there's getting close to 100 of us here, guys. How rad is that? And so the bulk of us have been doing this for a while, and so Tuesday night we already had this session lined up, which is not necessarily something that I would be throwing a brand new person into learning, but it still is worth jumping on and getting familiar with it. So let me quickly share my screen for YouTube so you guys can see the exact videos, and I might even add them to the playlist that I made with those other 4 videos, and then you can have them there. Let me just find this right thing. So this is the back end of my YouTube channel, which is not going to be the one you probably need to see, but it's more just a case of seeing. So that was last night's video right there, how to profit in market crashes. So that was our launch for all of you guys, showing you how to find the PDF, how to find these 4 videos, which you can see them here, but the general public can't actually see these. So 1, 2, 3, 4. Then going back, I did highlight last night that the ones you want to watch if you're brand new, if you haven't, I know quite a few of you guys have, is this Trading Secrets Revealed. It's called, on the thumbnail, it's What is TRENDFORCE? So that would be the first video to watch if you want to learn what TRENDFORCE is made of. And the next one, there's a 12-minute one on the rules, which I do recommend, but not necessarily straight away. But the next one is this one right here, Secrets of TRENDFORCE, Day Trading with the Force. So this Secrets of TRENDFORCE, Dad scaled it back even more, removed almost every line off the chart except a couple moving averages, and talked about what those averages are, just to give you a lot of simplicity for how it all works. So what is TRENDFORCE? The rules, and then that Secrets of TRENDFORCE. Those would be the ones to definitely focus on. And then this one up here that we did on the MACD, so MACD, TRENDFORCE, custom MACD versus standard MACD, that is a whole session we did a couple weeks ago specifically on the MACD that we have and how it works, how it functions, how to use what Dad said today about how to exit a trade. So that would be the next brilliant one to look at right there. Otherwise, let me unshare my screen. And at the same time, guys, Tuesdays moving forward, we will start to refresh those as well and do a wonderful, clean, fresh, brand new overview of how it all works, how to apply it. If you were showing up to the charts right now, how to click the button. But I know that in your first week, you've got a PDF, you've got 4 videos on foundations to go and work through. So as much as you want to go and click the button and work it all, we will get there, I promise. And there's time. I mean, I really want to, a massive shout out to Amanda. I took a little photo of what she said in our chat, which I know a lot of you read, but I mean, some of our team are watching this on YouTube later. So Amanda put in our chat earlier today, I'd love to encourage those who are new here and those who may have been trading for a while but haven't grasped things properly yet. I have been learning to trade for 20 months now. Since joining Tim and Ty, this awesome community, 2 months ago, I have grown in leaps and bounds. When I have a question, I ask the group or Tim or Ty, and within minutes, I always get an answer. To our best of our ability, I'll say, with an in-depth explanation. This has resulted in me trading every day of the week at lunchtime, and sometimes London session with 2 weeks of positive trades. If I can do it, any of you can as well, just with a lot of patience and perseverance. Have a blessed day. And Amanda, I want to just, shout out to you and your persistence, because this is the reality, guys. Like in that trading psychology video that Dan did a couple weeks ago with us too, we got super real and said, you know what, treat this like a journey. People always ask, like, how long until I can be making real money? It always comes down to individual, because I've seen people make 80 grand in their first 6 months, starting an account with less than 1,000. And that's not normal, but I've seen someone do it. They withdraw a stack of funds. They bought a Tesla. I've seen it happen. It's rare. That is the rare case. It's possible, but it's rare. And that person went all in. They were doing 2 hours in the morning. They worked from home. They did an hour in the middle of the day and another 2 hours at night. And so they don't have kids. They just accelerated. And so that they, at the same time, they then bumped into the psychological learning curves because they had to grow their mental capacity to be disciplined and patient. So their account went up like a hockey stick, but at times it also came down like a hockey stick because the risk management wasn't there. But what I'm trying to say in this is that look at trading like, think about it. If you were going back to uni and you were spending your first year learning a skill, like say you were becoming a lawyer or a doctor, whatever. Say you were spending 4 or 5 years in uni, it was going to cost you X amount to do that across 2, 3, 4, 5 years. You probably wouldn't be expecting to make money inside your first year or your second year. And I would say with trading, like give yourself that time. I say to most people, inside, I don't expect anyone to make life-changing money in their first year or 2 years. Like you should be able to start making money potentially within your first year, definitely within your second year, but it all depends on each individual. So, and you'll find it is way more about your ability to manage your own emotions and become disciplined. Learning these rules is not hard. Learning how to trade is honestly not hard. I promise in 2 months from now, 3 months from now, you are going to be so familiar with the stuff that right now maybe seems like a foreign language. But 2 months, 3 months, learning how to is one thing. Learning how to click the button is great. Learning when to click the button in terms of I see a rule that I know is there, but I feel the impulse, the FOMO to click that button and make money now. Like Dad said, he described himself as a highly disciplined and patient person until he found trading. And trading is like a wonderful mirror that is going to cause you to get really honest with yourself and gain some self-awareness for how prone you might be to wanting to push the button now. And are you capable of watching the charts for an hour or two and not pushing the button if all those rules aren't met? And I know, shout out to Zeph and Marcus the other day. They won a Zoom together, trading together, and I think they watched the charts print candles for 2 hours. And they didn't see a high probability setup and they walked away not pushing the button. And I think that's just really commendable because if the setup's not there, you got to treat it like this. When you're learning and when it's playing with demo, like sure, click the button to try and figure out what happens, but you don't want to create bad habits. And so when you're thinking about what size account you want to be trading one day, when your risk is small, like, shout out to Mike Kremer, we're having a chat yesterday morning. When your account is bigger, you're thinking like, you know what, I don't need 1 to 2 trades a session. I kind of need 1 to 2 trades in a week. Because making 2%, 3%, 4% on your total account in a week, like when you have a 6-figure account, guys, and you're making 3% in a week, that's a pretty good week. And so I want to encourage you, start thinking like that. Like start thinking when you approach the charts for an hour or 2 in the morning, where is the high probability setup? And if it doesn't show up in that window, it might show up in the afternoon, it might show up in the evening, it might show up tomorrow. And so there's 5 solid mornings and 5 solid evenings every single week where you can be trading. And so just think about that. Like think about, I don't need to actually click the button every session. And this might be for our guys that have been doing this for a few years, but just think, look for those high probability setups. Look for those ones that Dad highlighted, like where all the rules are met. Once you know the rules, it'll make a whole lot more sense. But look for those high probability setups and watch how your account starts to move in the right direction. So with that, guys, we are after 9. Let's wrap it up there. Thank you so much for tuning in live. My goodness, dozens and dozens and dozens of us. So cool. And I know that a bunch of you will be watching this later on YouTube. So remember, please hit that subscribe notification bell because this recording will be up when it's up. Last night it took me till 11:30 to edit and get it done, but then at least you will get the notification as soon as I drop a video or recording if you want to re-watch anything. Otherwise, guys, trade safe. We'll see you in the chat and we'll see you as well for our next session, 5:30 a.m. on Friday morning for live market analysis and hopefully grabbing some trades together. Right. Thanks again, Dad, for sharing as well with us and everyone else for tuning in live. Love you lots. We'll catch you soon. All right. Good night, everyone.